Hey all, welcome to ShareTreck. This is Raj here, and today I'm going to talk about Verve Therapeutics. And the reason I've selected Verve is because some of our subscribers have been keen to know what is happening with Verve lately because of the strength in its prices. And also, since Verve and Beam decided to renegotiate their agreement, there has been a spike in the share price of both Verve as well as Beam Therapeutics. So I thought let's do that, and this video talks about what I have found. Let's get started. Welcome back. Before we start, a very quick summary of what Verve Therapeutics does, because I don't think we have covered Verve in our channel before. I haven't done any closer look videos to the best of my recollection. So Verve Therapeutics is a genetic medicine company developing an approach to the care of cardiovascular disease, transforming treatment from chronic management to single course gene editing medicines. The company's initial two programs target PCSK9 and ANGPTL3, respectively, genes that regulate levels of blood lipids. Its lead product candidate, Verve 101, is designed to permanently turn off the PCSK9 gene in the liver. Reduction of PCSK9 protein in the blood improves the ability of the liver to clear LDL cholesterol from the blood. Verve 101 utilizes LNP-mediated delivery to target the liver and base editing technology to make a single base change at a specific site in the PCSK9 gene in order to disrupt PCSK9 protein production. Now on to recent developments, including the Q2 2022 earnings. So if we go back to June, in June 2022, Verve announced a collaboration with Vertex Pharmaceuticals to develop a gene editing program to treat an undisclosed liver disease. As part of a 4-year deal, Vertex will underwrite the costs of the program. It sent Verve an upfront payment of $25 million and bought $35 million worth of Verve stock. Verve will also be eligible for $66 million in success payments and up to $345 million in milestone payments and royalties on future net sales. This is a relief for the company because Verve had only $360.4 million in cash it had on the books, only enough to fund operations through 2024. However, over and above that, the company announced on 25th of July 2022 the closing of its previously announced upsized underwriting public offering of shares of its common stock at a public offering price of $27 per share, which includes 1.2 million shares issued upon the exercise in full by the underwriters of their options to purchase additional shares of common stock at the public offering price, less underwriting discounts and commissions. The total gross proceedings of the offering were $258.8 million before deducting underwriting discounts and commissions and offerings expenses payable by Verve. All of the shares in the offering were sold by Verve, so there was no shortage of take-up. So all the shares were sold, and with this, the cash and cash equivalents and marketable securities of over $595 million as of June 30, 2022 shows a strong cash balance. With their operating expense averaging $35K in 2022, this means Verve now has sufficient cash in its balance sheet to extend the cash runway well into 2025. Verve announced its Q2 2022 results last week with a Q2 net loss of 0.84 per diluted shares. That is 84 cents loss per diluted share compared with a loss of $6.66 per share a year ago. There has been a sharp decline in its net loss per share. So that's a positive from the recent earnings. During that Q2 earnings call, the CEO also recounted that during the quarter, in addition to advancing Verve 101 into the first human clinical trial with dosing a human patient in New Zealand, Verve has also nominated a lead development candidate and expanded their pipeline through two important collaborations, one with Beam and the other with Vertex. Other achievements included first-in-human dosing of Verve 101, as I mentioned before, and also an announcement that Verve 101 regulatory clearance for the United Kingdom and United States is anticipated in the second half of 2022. So this is a big milestone all investors are looking forward to. We are already in the second half of 2022, so anything can happen. So it's like a ticking clock counting down towards the regulatory clearance. Also during the quarter, Verve and Beam Therapeutics amended and restated their collaboration and license agreement, originally executed in April 2019. Under the amended agreement, Beam granted Verve an exclusive worldwide sub-licensable license under certain of Beam's base editing technology to develop and commercialize products directed towards an additional liver-medicated cardiovascular disease target. In exchange, Verve granted to Beam an exclusive worldwide sub-licensable fully paid-up license under Verve's intellectual property, including under Verve's GelNAc LNP delivery technology relating to a preclinical program developed by Verve. Verve also granted Beam the option on a target-by-target basis to use GalNAc-LNP technology for development of its own programs, with fees payable to Verve upon exercise of this option. In addition, the amendment terminated Verve's rights and economic obligations to two undisclosed targets, allowing Verve and Beam to independently develop and commercialize products directed to such gene targets. So both Verve and Beam are now free to develop on their own without infringing on each other. The EPS estimates for Q3, after taking all of this into consideration, is pegged at a loss of 76 cents. I'm a bit surprised about that because there has been equity share dilution due to the additional offering. So I would expect that we should be worse off than before, unless we have a situation where we get some approval from the FDA and cash starts rolling in. So that's what I would say about the Q3 estimates of 76 cents loss so far. A note of caution to investor comes from a few paragraphs in their Form 10Q submission. I checked out the Form 10Q submission because there were some news articles around it. And this is the paragraph I'd like to highlight to you. The paragraph says, we expect to continue to incur significant expenses and incurring operating losses in connection with ongoing development activities related to our portfolio of programs as we advance Verve 101 in our Heart-1 clinical trial. Continue our preclinical development of other product candidates, advance those product candidates towards clinical development, further develop base editing and novel gene editing technology, delivery technology, and manufacturing capabilities, and seek to discover and develop additional product candidates, including Verve 201, our development candidate targeting ANGPTL3. We maintain, expand, enforcement, defend, and protect our intellectual property portfolio, hire research and development and clinical personnel, ultimately establish a sales, marketing, and distribution infrastructure to commercialize any product for which we may obtain marketing approval, establish a commercial manufacturing source, and secure supply chain capacity sufficient to provide commercial quantities of any product candidates for which we may obtain regulatory approval, and add operational, legal, compliance, financial, and management information systems and personnel to support our research, product development, future commercialization efforts, and operations as a public company. So that's a whole mouthful of things, but just to summarize what it means basically is that Verve is warning everyone who is reading the Form 10Q that the company is going to continue investing in the development of all its pipeline items, and on development of its pipeline items, it will also continue spending to defend its intellectual property rights. And once therapy is approved, then it will devote a lot of expenditures towards marketing and operationalizing the production, distribution, and support of those products. And as a result of which, it expects that it may go into a loss on a prolonged period of time. So it wants people to understand that this is a long-term play and this is not a short-term play. Now let's have a quick look at TradingView platform and see what the technicals are telling us. So here we are with our TradingView platform, and I'm at the chart for Verve. Each of these candles is a one-day candle. We're looking at a long-term chart out here. The first thing I notice is that our MACD is still bullish, so I'm happy about that. The second thing I notice is that we have been overbought, and that's the reason why we have come down. As you can see earlier also, we were overbought starting from 7th of July all the way up to 22nd of July. And we kept on going up, and then we came down, touched the average, and then came back up again. So some similar action is likely to happen here, because just like in the earlier part, we have risen very sharply, and you can see that here, and it's not sustainable. So there's going to be a bit of consolidation before any further movement upwards. But for now, I think we will continue to stay above 33.69 for at least the next couple of days, while the RSI tries to consolidate and get into a more manageable situation. That said, I would also like to take out this measuring widget and look at our all-time high and try to figure out where we are in response to the all-time high. So today we are at 35.89. So I'm going to move it all the way to 35.89. So we have dropped around 54% from the all-time high peak. And we are today at 35.89. We have lost 3.46% today, and a total of 54.19% from the all-time high, which happened on 9th of September 2021. And if I was to ask myself a question, is Verve a better company today than it was on 9th of September 2021? I think the answer is a resounding yes, because they would have progressed a whole lot of their therapies into in the pipeline into FDA approval process. And all those gains are accruing to them as intellectual property. So that's one. The second thing is, since then, they have been able to come up with a few more collaborations that have generated revenue and also provided targets on which to work. Plus, right now, with the renegotiated agreement with Beam, they are free to go ahead and develop their own therapies and license each other's IP wherever needed, without Verve having to do any commitment of expenditure towards the joint projects that they had initially undertaken. So looking at all those things, I think that Verve is definitely in a superior position today than it was on 9th of September 2021 when it reached the peak. Further, I'm also looking into what their CEO said during the Q2 earnings call, where he said other achievements included first in human dosing of Verve 101, and also an announcement that Verve 101 regulatory clearance for US and UK is anticipated in the second half of 2022. So that I think is a very, very big factor in the strengthening prices out here. You will also see that when you look at this chart, you will also see that our exponential moving averages are slowly falling into place. For example, we have the 9-day exponential moving average, followed by the 20-day, followed by the 50-day and the 100-day. They are all in the right sequence that they should be in, one below the other. And now you can see the 200-day exponential moving average has already gone below the 9-day and the 20-day. And in the next few weeks, it should go below the 50-day and the 100-day exponential moving average to be at the very bottom. And then we'll be in a perfect bullish situation for this particular share. So overall, I'm feeling quite confident about Verve and its ability to generate profit in the coming years. And I think this should be a long-term investment. With that said, let me take you to the conclusions of this video. So as a genomics investor, we need to look at our portfolio and see if we have the right allocation for genomics as dictated by our risk appetite and capability. If so, then the next choice is to select between Verve, Beam, CRISPR, Allogene, etc. Each company is on a parallel track and all are racing towards FDA approval for their therapies. As I project forward, I can see that 3 years down the line, we'll start seeing more genomic therapies being approved by FDA. Therefore, we need patience to wait out a couple of years while the shares may fluctuate, more collaboration will be signed, and potential equity dilution may take place, or M&A activities may see change in our stake because one of the companies that we have invested in might be taken over by another big pharma major or something like that. So those things can happen. So basically, we invest only what we can afford to lose and ignore for the next couple of years. And if we do that, we can navigate this opportunity very nicely, and we could have a decent amount of stake. We should not become too greedy. A small stake in these companies over a period of 3 or 4 years is definitely going to give superlative returns, in my personal opinion. Of course, this is not financial advice, but I have just dug into Verve, and these are the thoughts that I had, and I thought I would like to share them with you. I hope you find it useful. And if you did, please don't forget to put a like out here, because it will help the channel show this video to other people who have not discovered our channel so far. And also, if you have not yet subscribed, and if you're watching this video, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.